Cent Warriors, today I want us to talk about different types of life insurance. Now, there are three types of life insurance. The first one is term life insurance. The second one is whole of life insurance. And the third one is the famous endowment policies. Now, what is a term life insurance? Now, a term life insurance is where the life insurance is going to cover you for a specific period. Let's take an example of 10 to 30 years. Now you can say, based on my goals or based on whoever I want to cover, I want to take a term life insurance for 15 years. Now, what happens if 15 years are over? I want to tell you that the insurance policy is going to expire and you're not going to get anything back. Now, but if something happens to you alive, if you pass on before the 15 years, the insurance company is going to pay your beneficiaries. Now, this is akin to famous insurances like medical insurances, whereby you pay for the whole year. If nothing happens to you, you don't benefit, right? But if something happens to you, you benefit. Look at the car insurance. Now you pay for the car for the whole year. If a risk happens, the insurance company will compensate you. If nothing happens, they don't give you back your premiums. So it is the same way as a term life insurance. It is going to cover you for a specific period of time, which can range from 10 to 30 years based on your needs. The second one is whole of life insurance cover. Now, as the term depicts, here you are covered for the whole of your life, right? So the insurance policy is structured in a way that you're going to be paying the premiums for the whole of your life. As long as you're paying the premiums, you are covered. But now, here is the advantage of this. There are insurance companies that allows you to pay for the whole of life with a term aspect. What do I mean? Like they give you can pay your premiums for 10 years, 15 years, 20 years, or up to when you're 60 years. Once you're done paying those premiums, you remain covered for the rest of your life. That is important. When you are asking for an insurance policy, ask your financial advisor if they have such an element in their policy, because this allows flexibility. You can pay your insurance premiums for only 10 years, then you are done, but you remain covered for the rest of your life. So in an event of death, your beneficiaries are going to get the benefit, the sum assured, or the amount that you had agreed with the insurance company that they are going to, cover your life with. Now, the third one that is the most popular is endowment policies. Now, the endowment policy is a type of life insurance that has a savings, not investment. They have a savings and an insurance aspect. It's a hybrid of a saving and an insurance aspect. Now, what happens here is that if you want an endowment policy, you'll be given an allowance between 10 years and 20. The other insurance companies that are going to give you up to 25 years or even 30 years. So you can make your premiums during this period. Now, if anything happens to you during this period, they are going to pay your beneficiary the amount of payouts that you had agreed before, when you are taking up this insurance cover. And another thing to note is that if you pass on during this period, maybe you have taken a 15 years endowment policy, the beneficiaries are going to get a sum assured. It's not as huge compared to, pure life insurance or term insurance, but they're going to get something. But at the expiration of 10 or 15 years that you had agreed that you're going to pay premium for, the insurance company will give you the guaranteed payouts that they had promised. They're going to give your beneficiaries that amount. And that's why we use these endowment policies for education plans and also retirement plans, such that, the highest probability is that you are going to be alive by the time maybe your 15 years term is over, or even 20 years term. Now, what the insurance company does is they are going to give you, your contributions back. I call it, because you are just saving. The risk of you not seeing through 20 years did not happen. So what happens is the insurance will just give you back the premiums that you have paid, plus some bonuses and a little growth in your, in your savings. And that's why most financial advisors will, kill this plan saying, this is not an investment, right? It's not an investment. It's a saving plan with an insurance aspect. Now, if you want higher returns, go and invest in things like bonds, money market funds. Endowment plan policies is not an investment, but a saving plan with some growth, and you're going to get a few, some dividends. So those are the three types of life insurance: term life insurance, whole life insurance, and endowment policies or endowment plans. See you in the next one.